Hey folks, Dan Frio here with your market update for November 6th, 2024. So the election piece of this puzzle's over, but it's not over yet for the week. We have data coming in from the Federal Reserve. So the news that we're waiting for next is the Federal Reserve is meeting in 1 day in 2 hours. What are they going to tell us? Well, that's what we're trying to figure out. The bond market right now is crazy. The equity markets are absolutely going insane, and Bitcoin and cryptocurrencies are also on a roll. So what's taking the backseat to all this stuff? Interest rates. Interest rates are poised to take a big jump today. So let's get over to the news. Right through here, unless you just got up, former President Trump just won, so he is now president-elect. And now what we're focusing in on is how the rest of basically the political campaign is going to go. Is it going to be a complete red wave? What's going to happen? So that's also going to play a role in some of this. But you have to remember that right through here, Trump's victory cast a shadow over the Federal Reserve, because the Federal Reserve is meeting when? Like I said, it's meeting tomorrow. So what are they going to do? Well, let's go to a former Fed official, and I'm going to let you hear what he has to say. But right now, the MBS market is getting killed right through here. So mortgage rates are poised to spike today. But let's see what the Federal Reserve's former official has to say about all this so we can compile that. Basically, other than that, there's really no economic news for today on Wednesday. It is crude oil inventories. That's the only thing we have out. We do have a 30-year bond auction coming out later today. We'll see how that goes, what grade that gets. So I'll be doing that at the closing bell. But let's get over to this commentator to see, based on the election, what's the new take on the economic outlook. So let's get to it.
The Fed kicks off its latest meeting today, and a lot of economists are expecting a 25 basis point rate cut tomorrow. Joining us right now on that and the Fed independence conversation is former Dallas Fed President Rob Kaplan. He's now vice chairman at Goldman Sachs. And Rob, let's pick up with what Scott was just talking about, this idea that former President Trump and upcoming President Trump has said that he would not renew Jay Powell. Scott just said maybe that it makes the Fed even more independent over the next couple of years. What do you think?
I think the Fed will act independently this year and next year, and they'll do their best to screen out political influence and political considerations. That's what they've been doing, and I think they'll continue to strive to do that.
And that Fed operating under independence should be doing what, you think?
So they'll go ahead and make a cut in November to 25 down 25 basis points. I think December they'll leave their options open. They won't commit to it. And they've got to take some time to see how the economy unfolds and how these policies unfold. I've been saying for a while that there's two phases of the rate cutting. Phase one is, as long as inflation is sticky around 2.5, they can get to say 4.25, 4.5. But they need to see progress from 2.5 to 2, in my opinion, to cut rates lower. And I still think that's the approach they'll take.
Okay, let's talk through some of these potential policies. I'm assuming you heard this conversation we just had with Scott.
Yeah,
okay.
Before they get to the policy cuts, I want you to see what today's trading range looks like. So for those out there that are realtors in the mortgage business or consumers, let me explain what's going on right now. This is the bond market, how choppy it is today. It came out of the gate. It just tanked. Now it's coming up. Look how we're at minus 57 right here. Imagine how far down we were here. So we are coming back, but let's look at the trends that we see. Yesterday, here's where the market was. So the interesting piece about this piece is, see this line right through here? Right through there at 98.87. That's a line that seems to be holding right now. So that's where we were yesterday morning. And then all of a sudden, remember, I did my afternoon video and then my closing video, and I'm like, man, there's somebody knows something about what's going on. Then you had this huge rally going on, and then we basically just gave it back. So virtually, this looks catastrophic, but where we are basically at yesterday's opening bell when it comes to the MBS market. So let's get back to this. I just want to give you an update on how that's reacting right now on the news, but let's get back to the commentary.
Let's talk about the idea that if they rein in spending, whether that be cutting back the IRA, the CHIPS Act, trying to cut government spending. I don't know how effective they'll be able to be with some of those initiatives, but if they do rein in spending, that would be anti-inflationary. Then you take the idea of lower taxes, put that where you want in the pot. Tariffs could be inflationary. How do you see all of this adding up?
This is going to be a mosaic. It's going to be a puzzle, and you're going to have to look at it holistically. So the first issue I look at is what are the immigration policies, and what's the effect on workforce supply? Does it actually go down, or is it more manageable? But that's the number one question. What the immigration policies and some of the things that have been said, what do they actually do? Tariffs we've talked about. Remember, tariffs is just on goods. Goods is 30% of the economy, and people are dynamic. If things are more expensive, they substitute. They buy other things, and some of this may be negotiating.
So let me just clear up something real quick. And I don't, what your views are on tariffs are your views. But here's the way I look at it. Exactly what he put. There was a cartoon somebody sent me last week, and it read this. You're on your cell phone made in China. You're driving your car made from Japan. You're using, you bought your clothes from Korea. You did this. But you want America to prosper and higher wages and everything else. But when you're buying stuff, you want all the cheap stuff. Okay, so that's one of the aspects of the tariffs. Trump's coming in saying, we're going to jack the heck out of the tariffs. Basically, here's my thought behind it. And this is my thought only, and I'm not being political on this, is because I grew up in this atmosphere. I grew up in an area that was basically dominated by steel mills, and they're no longer in existence anymore. And the reason why is China dumped steel on the U.S., and their government was subsidizing the steel at the time. So they outpriced all the steel makers in the US, and now just Google it. How many big steel mills are still in the US today versus the 1980s? Okay, so that's one of those pieces of the puzzle. So what he said is people are just going to divert their buying. Instead of buying that cheap cell phone from Korea, maybe it'll be priced the same as a U.S. made phone. So these are just the areas that I want you to understand. So I'm like pro tariffs? No, but it might be at least a negotiation tool to get to the table. So that's just my personal thoughts on this.
There's going to be a significant regulatory review economy-wide with the intention to improve productivity per capita. That's disinflationary. There's going to be, I'm sure, and Scott mentioned it, a focus on energy policy and probably pressuring Saudi Arabia and domestic producers to produce more. And so you'll have to look at the mix and how it unfolds, but I'd be careful not to prejudge it. I think the one thing I'm very sensitive to, and they'll be sensitive to, debt to GDP went from 70% pre-COVID to over 100%, and we're seeing the term premium on the Treasury market inching up, meaning we're paying more to sell duration in Treasuries. And I think managing the debt load and how we do it is going to be a significant challenge.
So that's what they're saying is we need to cut the deficit. We got to quit spending. So there's a whole bunch of dynamics coming into place now. We're going to follow it like we do every other candidate, every other political piece. And trust me, if I won't get political, but let's get over to the MBSs right now. They're up 60 or down 60. Here's what it's saying. So I'm going to show you this as the day progresses right through here. So what happened here? Well, the 30-year fix just opened up. Market's just open right now with rate sheets. So I'll show you guys how this day progresses on the economic calendar. Like I said, there was really nothing there. Let's get over to the stock market. This is crazy. Look at the green all the way across the board. Dow Jones up 1,200 points. S&P up 104. Dow Jones up 3%. Let's put in percentage terms. Dow Jones up 3%. S&P futures and NASDAQ up almost 2% apiece. Treasuries, they're going in the wrong direction. Oil's up just a tick at 0.61. Cryptocurrencies are killing it right now. Cryptocurrencies just peaked over $74,000 a coin, up 5,007% today only. What else are we interested in here? Oil, we just saw that at the last screen. It's ticking up a little bit. Well, let's see how this all progresses. So the concern right now is what the Federal Reserve is going to do tomorrow. So let's get to the odds of that. So again, we go to the CME FedWatch tool. What is it actually? Well, it's telling us the projection or the percentages chance of a Federal Reserve or what the Federal Reserve is going to do at the next few meetings. So let's scroll down through here. Let's go to the aggregate probabilities. And now it's saying right through here, there's no chance that the Federal Reserve will not cut rates tomorrow. So we're seeing a 99.2% chance they're going to cut rates because the federal funds rate will be reducing to 4.5 to 4.75 from where it is right now at 4.75 to 5. So that's my report for today. We have a live event coming out this afternoon. Me and Kyle Seagraves will win the house you love. We're going to talk about the election, how it's playing an impact in all this, and we'll kind of put all this into perspective for you, answer any questions that you have, and give you maybe what our forecasts are for 2025 now that the election is over. But one of the biggest catalysts that's coming this week as well is tomorrow, the Federal Reserve meeting. What are they going to do? Stay tuned. I'll give you more content on that at the closing bell today and also during our live event. So my name is Dan Frio. I do this report every day, 2 times a day, opening bell and closing bell. Why do I do it? To keep you guys informed. That's the whole purpose, helping you guys understand the markets. When I talk about the markets, I talk about the equity markets, cryptocurrencies, stocks, bonds, and we focus in on real estate here because real estate is a huge catalyst if you're looking to build wealth in your lifetime. So go to therateupdate.com. You're going to find all our information right through here. If you're looking to buy that first house, please make sure you check out the grant finder that we have right up through there. We handpicked specific programs to give you money as cheap or basically as free as we possibly can get you for down payment assistance and closing costs. So that's our report for today. I'll be back again, like I said, on our live event with Kyle Seagraves this afternoon. Check us out there. You can ask any questions that you want. We don't screen them. We don't know what your questions are, and we try to get to every question we possibly can. So if you'd like to reach out to us to talk to somebody here at the team to see if a purchase is in your future, maybe a refinance might make sense to you, a reverse mortgage, investor loans, DSCR programs, we have all those. So I'd love to help you navigate that. We're licensed in all 50 states as well as Puerto Rico, so there's no reason why you shouldn't be at least trying us out. So take care, folks. I'll be back today later this midday on our live event, and I'll be back at the closing bell to let you guys know how all this mess ended for the day. Thanks for watching. See you soon. Bye-bye.